You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means we are back once again on the Options Bootcamp Drill Instructor Proving Ground. Yes, it is time once again for Options Bootcamp. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network. If I sound a little drained, it's because I am hot on the heels of our big election night special here on the network. I'm pleased to see so many of you were able to join us live. We had listeners from all over the world in there live. It's fantastic to see and to hear your questions. I said it before, I'll say it again. You guys are the best audience on the planet. You're insightful, intelligent, respectful, all the things you could ask for from an audience and more. If for some reason you missed it, maybe you're outside the U.S. and you were asleep, even though we had a lot of international listeners joining us, or maybe you just had a bunch of other things going on. It's election night here in the U.S. I get it. Well, we're going to put it out there in smaller, bite-sized chunks for you. The first half-hour chunk just hit the network as we went live with this show. So you can go check that out. It's with myself and Mr. Hausman, the director of risk over there at Swan, as well as Matt from Orats, a.k.a. the Oracle of New Hampshire, a.k.a. the sharp-dressed man in the ZZ Top video, if you've seen some of the Advisors Option episodes. You know what the heck I'm talking about there. So that's the first one. There'll be many more segments to come. We had a slew of special guests joining us, including, I am pleased to say, the black-headed one himself, Mr. Passarelli, a.k.a. the founder of Market Taker Mentoring. Mr. P, welcome back to the program. A, and B, have you recovered from the big election night special?
I have. That was very good. There were some really great guests. Those of you who didn't catch it, you should watch watch that episode. Check it out. There was really some great information there.
As I recall, you have an outstanding wager with Mr. Uncle Mike. I forget. You were on the side of no outcome, right?
I was on the side of no outcome, no concession buy, and I thought I was like stealing it from him by saying midnight last night. I mean, if he would have said by the close of business today, I still would have took the bet.
Yeah, well, it seems like that way lies the path to victory. Unfortunately, you only got filled on one of your $499. But it's enough. It's the old Mortimer bet from Trading Places. Turn those machines back on. I will make sure I hold his feet to the fire tomorrow on the option block and make sure he confesses yes, because it was looking kind of interesting last night. Again, check out our special if you haven't, listeners. It was interesting. We saw a huge resurgence in the futures, and then we saw a huge resurgence on some of the wagering sites where you can actually trade effectively binaries on President Trump, that he surged up to about 80% probability on those sites. The futures were limited up. It seemed like something had really swung in his favor. I think some places were predicting Arizona, others that he got Texas in his column. Whatever it was, something really swung in his favor. Then overnight, of course, we saw a little bit of a deadlock set in, and now this morning, it seemed like they're starting to call some states for Biden, including Wisconsin, and that has swung the futures a little bit differently. And of course, the betting sites were down. Trump was down from about 80% down to about 28 to 30%. He has now resurged he's at about 50% again. And speaking of resurgences, the markets are just on fire. Depending on where you're looking right now, this is explosive. The Dow itself is on track for its best post-election day in over 100 years, 120 years. That's only up 1.5%. The S&P is up 2.3%, and the NASDAQ up about 3.7%. Remember, we were saying last night that 3,400 level, a key level to watch in the S&P. It seemed like it could get there, and then it bounced off it a few times. It was a pretty strong resistance until it wasn't. Until it kind of blew through it last night when the futures were limit up. And today, still feeling the love at almost 34.50 out there. So it's kind of strange, Mr. P. I mean, we don't really have an outcome. Your bet, obviously, you're the winner of your bets. And it seemed like last night the markets were rallying on Trump news and selling off on Biden news. Now it seems like Biden looking a little bit better today, and yet the markets, we don't have an outcome either way, and the markets are still in rally-ho mode. What do you make about today's aftermath of the election, sir?
Well, I still stand by what I was saying last night, and I think it's going to be a while. I mean, honestly, I was surprised we rallied so much today. We pulled back a fair amount off the highs, though, once Biden won Wisconsin. And so, Michigan, like if you look, Biden now needs, there we go. 22 points. And he is ahead in Michigan and Nevada, which add up to exactly 22 electoral votes. But here's the rub. Michigan has 99% of its voting in. And it's close, but it looks like Biden will probably pull it off. So he'll probably get those 16 votes. But Nevada's 6 votes that he needs, they're only 75% reported, and they can keep counting votes until November 10th. So if they can keep counting votes until November 10th, I don't see how we can get this wrapped up by then. The only way we could get it wrapped up by then is if Biden flips one of the other swing states that he's currently behind in. But I think we're in this. I think we're in this for a few days, man.
Yeah, it is very much a toss up right now. I'm looking at different outlets to see where we're standing right now. Of course, coming into our special, again, this is why I've said all year long, listeners, you have to just throw the polls out the window, because coming into the special last night, I think the consensus, the average of the polls was in the national race. Biden had something in the order of an 8-point lead, something along those lines. And in most of the battlegrounds, he had various leads out there. Of course, throw all that out the window because Biden is leading by, looks like, about 2% in the national poll right now. But of course, we don't elect. We don't elect our presidents like a democracy should. We elect it by electoral college. So that's still all tied up. Different outlets are calling it different ways right now. I'm looking here. The AP has it 248 to 214 for Biden. Obviously, you need 270 electoral votes to win. So, yeah, we're still very much in a deadlock here. Mr. P, what was the takeaway from your mentees and your clients today? Were they coming in saying, hey, I want to get at this, I want to buy, I'm feeling bullish? Were they still looking to hedge? What were they looking to do? Were they sitting on the sidelines? What was the mood over there at MTM today, sir? I think there's a lot of watching going on, which I think is a great thing to be doing. Anything can happen, and there's been some stuff that I predicted correctly, but there's been some stuff that surprised me as well. I'm still surprised that the market's up this high. I feel like it's so likely it's going to pull back. Yeah, there's a lot of wait and see. There's a whole bunch of wait and see. Well, we're not going to wait and see any longer to answer some of your questions. Let's get to it. A little bit of the old mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, let's get to it. You guys have a lot of questions, understandably so, after this crazy period here in the markets. Let's see how many guys we could squeeze in here. Amazing my voice is still intact here, listeners. Let's start off with Jason Cruz. This is, hi, guys. Recently discovered the show. or I should say recently rediscovered the show. So I guess he was a listener, then maybe he fell off for a bit. Now he's back. Either way, Jason, welcome back to the family here. He says, I have a question for OBC. Are deep in the money bull credit call spreads ever worth looking at, or would they just be begging for an early exercise headache? Now I have to go back to catching up on my episodes starting at 2013. Congrats on the great run. Well, thank you, Jason. Yeah, you have a lot of catching up to do, so buckle up. Take your time. It's a lot of content there to enjoy. That's one of the fun things about the network. I kind of envy people who are discovering it now for the first time, or perhaps, in Jason's case, rediscovering it, because there's so much content there waiting for you. The best way to get it all, listeners, you can go to our website, of course, and stream for days there. A lot of the major platforms, like your iTunes and others, they'll probably limit you to 50, maybe 100 of the most recent episodes. That'll cover a lot of shows, but in our case, we go back nearly 14 years, so it's not going to cover our breadth of content. So in that case, the app is probably your best bet. It's really going to get you unfettered access to everything. And you can build your own playlist. It's pretty cool. So check it out wherever you're listening. iOS App Store, Android App Store, even the Kindle Fire App Store. It's all there. And you guys can play along. Now on to the question. This one kind of struck me as odd. I was like, what kind of voodoo is this guy working where he can buy a deep in the money bull call spread and get a credit for it? I don't know what magic he's working, but if he is, I want to know his magic. So he pointed that out to him, said, I'm not sure if you're able to get a credit for this. And he said, I meant a debit spread. I'm sorry. He says, my example is the XYZ 89.90 call spread for, let's say, 90 cents. But the same question about the short leg getting exercise earlier. Well, in that case, if it's only a one strike spread, it's pretty much effectively a no delta, right? If it's I don't know where XYZ, let's say XYZ is trading 100, so you're trading over 10 handles in the money. You're going to have a very, very small delta to that. You're buying, think about it, listeners, you're buying one effectively 100 delta option, and then you're selling another effectively 100 delta option. So what you're doing is analogous. You're doing the meaty legs. I'd encourage you, Jason, and others who are interested in this, go back and check out our episodes we did on box spreads not too long ago, because what you're effectively doing is the meaty leg. So effectively, you're trading a bit of a carry play, an interest rate play, which is not the most viable path for retail to go down. And we talk about that a lot on that episode, so I encourage you to check it out. Box spreads, a surprisingly contentious topic in the year 2020 and beyond. Mr. P, what are your thoughts here on Jason's request for deep in the money, in his example, one strike wide call spread, sir? Do you have any use case for these?
Yeah, I mean, I have a couple comments that I think can be useful. I think it's really important. Was it on our last episode where we were talking about how important synthetics are?
Yes, we were.
Yeah, okay, that's what I thought. Synthetics are super important, and when it comes to vertical spreads, debit or credit, it's really important to understand your synthetics, because here's the deal. The 89.90 debit call spread is synthetically equivalent to the 89.90 credit put spread. So first of all, from a trading standpoint and management standpoint, it's super helpful to think of it as a credit spread. Like your positive theta here, the stock's got to stay above your strike price. I mean, you should be thinking about it just like it's a put credit spread. Now, all that said, there's this thing about early exercise that we want to be careful about. But calls, and it's important to know when you are likely to get exercise and when not. Calls tend to only get exercised the day before the ex-dividend date, unless the stock is hard to borrow and maybe a couple other rare nuance scenarios. So if it's not the day before the X dates and the stock's not hard to borrow, you've got pretty low risk of getting assigned.
Yeah, the assignment part isn't really the part I would worry about either, as Dan just pointed out. Kind of ex-div date. The only real reason, economic reason to exercise an option early, listeners, is, of course, to exercise a call to capture a dividend. You're only going to do that ahead of an ex-div date. So outside of those scenarios, you're pretty safe. And even still, this deep in the money spread, you don't have to worry about it because you have the other leg against it. So it's not something you really have to worry about. You're just setting up a whole bunch of really legs and commissions to signify nothing. We used to do these types of trades deep in the money, and there were boxes in the indexes back when we were market makers, because effectively we would have different interest rate positions on, and we could actually play that carry a little bit. It doesn't make sense for a retail to do this. Your margin treatment is different. You're generating trades and commissions to effectively signify nothing here. I don't see. I think the question I would have for you, Jason, anyone else who's considering this, is you don't lay out a scenario for why you want this. I mean, you're not getting any delta, you're not getting any exposure. So I'm trying to see from a retail trading perspective why this would be a desirable position. You're just kind of churning and burning. You must love your broker. That's the only reason I could think of why a retail account would want to do this. Professional side, institutional, a little bit different. But on the retail side, I don't see much reason for you guys. I don't think early exercise is the reason you shouldn't do this. There are many others. So yeah, let us know why you want to do this, and maybe that will help point us in the right direction. Where did you hear this was a good idea? All right, next up, Big Bull. I like these handles. Big Bull, Big Beer. He wants to know why options are not allowed to trade overnight too, like futures, especially on futures. Well, you're looking there, you actually can trade. If you go over to, let's say, CME, pick your poison, which I don't know which future you're looking at. We can look at the equities, or perhaps we can look at, some of the commodity options out there. But you do get a much longer trading cycle out there. You've not quite 24 hours, but pretty darn close to it out there. So if you're interested in those types of things, like I have it right now, here's the E-mini. The hours are effectively the only times you're off during the weekdays. There's a kind of a little blip between 3:15 and 3:30 while they kind of reset, and then kind of between 4 and 5. And then other than that, you're pretty much trading all the time there on the E-mini. So that's what you want. If you want action on those things, I mean, obviously it's going to be a little bit less liquid in different trading hours than they are right in the height of the U.S. trading hours. But I don't know where you're looking and which futures you're looking at. If you're looking for, usually the way we get this question is, hey, how come I can't trade, let's say, Apple options 24/7 the way I can futures and futures options? And in that case, we've had that conversation many times. We've talked to the folks at OCC. We've talked to the various exchanges. We've talked to the brokers. That's a very divisive issue. The retail brokers want it. A lot of you retail customers want access. That would have been nice to have liquidity. Wouldn't have been last night in some outside of the major indices in some of the maybe underlying stocks that you like to trade and the options on those stocks. So that would have been nice in the after hours. There's very much a split down the middle in the equity options world as to whether or not to allow that. It seems like the answer is no for the time being, but hopefully we'll see a little bit more movement on that. But usually when we used to have big conferences like the Options Industry Conference, I would put this question to everybody every year. I would say, why don't we have after hours trading in equity options? And I would get a whole slew of answers. And I encourage you to go check out some of those interviews I've done in the past to see what it is. Everyone's got a different reason why they want it or why they don't. But we have it on the options on futures. It's not so much on the stocks. I don't know, Mr. Dan, this is kind of a frequent talking point for us here on the network. Haven't had this question in a little while, though. Why do you think, I'm going to assume he means why we don't have, after hours trading on equity options. Why do you think we're not there yet, sir? And are you a fan of it?
It's hard to say. I mean, I kind of like the opportunity to have a break, I mean, especially, when you and I were down on the trading floor living and breathing, we still live and breathe the markets, but like that intenseness of being a professional trader, like I would have hated to have, it was bad enough to have to scalp stock in the middle of the night sometimes, to get my hedges in, but I think it's kind of nice to have a little break. I mean, that's more of like a social answer rather than a quantitative or economic answer. But I don't know. I wouldn't be surprised if the exchanges one day go for that. I mean, it's such a competitive industry that's scratching for growth wherever they can. I wouldn't be surprised to see it. I haven't heard anybody talking about it recently, but I wouldn't be surprised. That's all I'm saying.
Yeah, it seems like once the pandemic reared its ugly head, talk of, 24/7 options trading kind of went out the window. Everyone was busy trying to scramble and make sure what we had was still functioning. For a while there, the entire industry was trading fully electronically for the first time. So the notion of adding additional hours was just, unfathomable. So maybe now that things are, I hate to say getting back to normal because they're not, but maybe settling down at least on that front. Maybe the election's somewhat behind us here. Maybe this is the conversation that could come up again, but I don't expect this to come up again. Not till at least, let's say, middle of next year when maybe things are a little bit quieter and they could start turning their attention to more luxury type items like this rather than keeping the necessities and the basic functions of the market going. Visual Care has maybe a somewhat ill-timed question, though he has a smiley laughing face with us. Maybe he's joking. He says, should I be putting on some hedging trades? ? And then a laughing smiley face. Well, it seems like maybe that horse left the barn before the election. Of course, today, you don't need any hedges. You just go buy whatever freaking stock you want because they're all moving up today. But, weird timing. Mr. P, should he be putting on some hedging trades? ?
Well, what most investors like to do is they like to wait until the market hits a bottom and buy puts then. It's a less crazy question than it should be. But you actually do see that, that's why the implied volatility gets so high when the stocks are down, because that's when people are buying it and it gets the highest at the bottom. So, timing is everything when it comes to trading. Keep an eye out for that. Look for it and pick your spots, my friend. Pick your spot.
Another one here from Else Grieve. Interesting handles today. Wants to know, when does the spot VIX start to rise? Well, not today, Else Grieve. It's taking it on the chin. We had a conversation last night. We were kind of guessing on our special what we think would happen to VIX if we had an outcome last night. We didn't have an outcome, yet the market's certainly acting like we did, up strong, like I mentioned at the top of the show. I came down somewhere in the 20s when it came to VIX. I think I said somewhere around 27.5. I do believe Matt from Oratz kind of cribbed me there as well. We both kind of came down around that level, and we're not quite there, but we're not that far away from it right now. VIX at about 29 3/4 as of a few minutes ago. So the market's feeling its oats today. I would say VIX would start to rise if we didn't have the action we saw today. If we saw the exact opposite and we saw, a multi-% sell-off in the markets, then you'd start seeing your spot VIX start to rise. But not today, Mr. or Mrs. Else Grieve here. Let's see, what else? We got a bunch of questions coming from all different topics. Here we go. It's an interesting one. This one I think we touched on the show last night. Make a difference about selling put spreads and call spreads with elevated implied volatility. I think we touched on that. I think you answered that actually last night, Dan. So I think we touched on that one less on the episode. Mr. Murdoch wants to know, interesting discussion on capital asset pricing models and portfolio diversification on our last show. Oh, yeah, that's right. We had a listener ask us about various factor models for how they evaluate portfolios and what their role is in options. Mr. Murdoch wants to know, what role do you feel that options play in proper portfolio diversification? This is an interesting topic, something we touched on a few times, as you mentioned, very recently here on the show. The traditional thing, I was taught this in school. I'm sure a lot of you who studied, finance or economics, and probably taught something similar along the way. What he mentions, the capital asset pricing model and the way you distribute your assets to get quote unquote true diversification, and it came down, various models would say somewhere between 24 and 40 different assets to somehow diversify your portfolio. And if you did that, you were somehow truly diversified. Of course, when we all go to the real world and we see how the markets really work, which is why they call economics the dismal science, is because it doesn't really hold in the real world. And we all saw, let's look at last week or back to March when we saw massive sell-offs in the market. What did pretty much every major asset do? Yeah, they all sold off. So we saw gold taking it on the chin back in March. We saw Bitcoin sell off 30% intraday back in March. All these quote-unquote diversification assets sold off. And forget about you buy a bunch of different stocks. They're all pretty much correlated to the S&P. They all sold off as well. So all of your traditional assets you might usually use to diversify all sold off, which is why we say, I have said before, an option is one of your real few reliable sources of diversification. You buy a put on the S&P, you know exactly what you have. You have a delta, you have a gamma, you have a theta, you have a vega, you have a strike, you have a contract date. These are all things that are set in stone. It doesn't matter what the hell happens with the rest of the market. You have that contract. It is in your hot little hands until it expires. And so you can rely on that. VIX and volatility products, a little bit different, a little bit less reliable because you're not quite as set in stone. But on days like last week or in March, a huge explosion to the upside, they're also going to give you a nice bang for your buck. So those are kind of the only two, in my view, real reliable diversification tools because you know exactly what you have. Dan, what are your thoughts here on the role that options play in proper portfolio diversification, sir?
We've talked about this. It hasn't been for a very long time, though. Think of options as its own. Well, think of volatility as an asset class. Like volatility is somewhat related inversely to the equities market. But, so are bonds for that matter. So is the credit market for that matter. So is gold for that matter. So, it is a different asset in and of itself, this, this ebb and flow of option premium. So there was certainly like a whole bunch of talk, 5 years ago or so, that from a lot of money managers that volatility, the asset class volatility, should be part of your portfolio. Now, to be clear to everyone, like that doesn't necessarily mean buy and hold VIX futures or options or anything like that, or VXX, which because of contango would probably be a losing scenario for you. But trading volatility for those who have that skill can be a really great addition to a portfolio, in my opinion.
Yes, it is. Listen to the SIBO, they'll call it an asset class, and it certainly does have its own characteristics, which you could argue in that category. And if in times like last week or back in March, those characteristics can be helpful. Let's see, we got time. Let's see if we can squeeze in couple more here. ABR8 has a question kind of like what we just talked about. He says you can trade options on crude oil pretty much all day long, but options on Apple only trade until the close. Why is that? Do you think we'll ever have 24/7 trading for options on stocks? Well, ABR8, see what we just talked about a few minutes ago. We kind of had that exact same question out there, but we appreciate you writing in nonetheless there. Mr. Who was it who beat you to the punch there? Big Bull Beer beat you to the punch, unfortunately. All right, let's go up this one. This is kind of a silly one. We got a quiz here from Sevi. Dan, are you ready? Sevi says, I saw this in my textbook, and I thought I would pass it along. Maybe your listeners would find it informative. Or maybe it's too basic. Love the show. And his quiz is, you want to buy 100 shares of XYZ stock, and you don't want to pay more than $20 a share for it. Which option strategy would be the least expensive? A, buy one XYZ $20 call for $2. B, sell one XYZ 20 call for $4. C, buy one XYZ 20 put for $1. Or D, sell one XYZ 20 put for $3. Mr. P, what are your thoughts here on Sebi's quiz? Which way do you want to go?
Let me see here. You want to buy 100 shares of XYZ. You don't want to pay more than $20 a share. Which other strategy would be the least expensive? Well, I guess it looks like selling one of the 20 puts for $3 would be the way to go, given the information we have.
Yeah, kind of hard to argue with collecting $3 being the least expensive way to buy it. Yeah, I'm definitely down with that one as well. So yeah, a pretty basic quiz, but Sebi, we appreciate you passing along. You almost stumped Mr. P very quickly, but almost, not quite. Got to get up a little earlier to stump Mr. P out there. But yeah, we'll take $3. I've said this many times. This is a use case everyone who listens to this show should be doing. If you're considering buying an underlying and you're comfortable working a limit order to buy it, then you should be comfortable selling a put to do same thing. And hey, in his example, you'll get $3. There are definitely worse things to have to worry about. Unfortunately, this music means we have come to the end of our epic little sojourn here for Options Boot Camp this week. If you need more in your ear holes, don't worry, we'll be coming back at you on the podcast side with an OPR later today. It is Education Wednesday, after all, so you get a double dose of education today on the podcast network. Tomorrow, we'll be back live at noon Central, 1 p.m. Eastern, with episode 2 of the Option Block for this week, followed at 1:30 p.m. Central, 2:30 p.m. Eastern by TWIFO this week in Futures Options, and we round it all out again live on Friday, noon Central, 1 p.m. Eastern, with Volatility Views. So a lot still in store for you this week. Of course, you're listening after the fact on your device of choice. Just hit next. It'll all be waiting for you there once it's recorded and put out to the network. But before we go, Mr. P, if folks aren't tired of you after the epic special last night and another episode of Boot Camp today, and they want more Passarelli in their lives, where should they go? What should they do?
You can always find me on my own little corner of the internets, markettaker.com, 2 T's in a row, and we'd love to hear from you. Absolutely.
There you go. MarketTaker.com is the place to go. And on behalf of Mr. P and indeed myself, I thank all of you out there for downloading, streaming, subscribing, for sending in such great questions. Stay calm, stay sane, stay safe out there. And we'll see you back here live tomorrow for the Option Block. See you back here on the podcast network a little bit later today for Options Playbook Radio. And then we'll see you back here next week on Education Wednesday for another episode of Options Boot Camp.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.